Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody. Last show before Canada Day. This is one of my favorite times of the year. I love it. The weather's beautiful.
Well, what a beautiful day outside. And, after being away for 2 weeks, we're probably going to have tons of listeners because I'm back, Greg.
You forgot our show was at 11, didn't you? You showed up like at 9:45 or something. You thought it was still 10 o'clock. Eh?
No,
You've been away for a few weeks. So it's like, oh, my God, what time's the show at?
Right. I totally forgot. I got down here early. I was visiting my dad at the hospital, and I thought
How's he doing? How's Superman doing?
He's hanging on.
Yeah?
He's hanging on, yeah. But so I thought I would get here a little early and enjoy a little market fresh air and beautiful sunshine. So it's gorgeous out today. Gorgeous.
It is. Lots of people walking around, which is awesome.
It's
fantastic, actually.
Such a delay, though.
Yeah,
like I was talking to a gentleman yesterday who's looking to sell a place on the water in Carleton Place, and he's like, I feel like I've missed the sort of the cottage season and stuff like that. I was like, it hasn't even started. Like, I go up to my cottage and I see like 3 boats in the water. Usually there's like 30 boats in the water. It's just we had such a delayed spring that I'm hoping that we're going to have a really strong summer. When the numbers come out this month, we'll see what happens. What happened in May?
June, you mean?
In June, sorry.
That's how long he's been away.
That's how long I've been away.
Still thinks it's May.
Hold on, that's right. I don't think I've been here. But yeah, we'll see. We'll see what happens in June. I mean, we saw at the end of May. I mean, number of sales was down. 6.3%. Average sale price was just slightly down, less than 1%. We'll see what happens. I mean, we had a strong month as a company, so I'm hoping the real estate board also had a strong month. But I'm anxious to see when the numbers next week, when the numbers come out. I'm assuming with Canada Day, they'll probably be out next week. For the show, but yeah, interesting to see what happens in June. It's been a very weird spring. I mean, we saw Jan, Feb, March, which were completely dead. We saw April, which was very strong. May was decent, and we'll see what happens in June. I know right now, pricing is absolutely king right now. Absolutely king. Price reductions are happening. Sellers are extremely grumpy right now. And I'm telling you right now, like, Greg, you sent me a really cool thing this morning, a really cool article. Well, not an article. It was about a lady talking about pricing and all that.
Yeah.
And the days of, we want to try this and have some negotiating room, gone. You cannot do that. You have to be priced right at market value. And if you decide to go a little bit higher, you're in trouble.
So what's the trap? Like, what's going to get you in trouble with that philosophy? I need a little space to negotiate.
Well, the problem with that is if you overprice your property, it's going to sit, and it's going to sit, and it's going to sit. By the time you reduce it, the buyer now has all the negotiating power. They know you've reduced the price. They know you could be a little bit desperate. You've been on the market for 3 weeks, maybe a month, maybe even longer. They know you're absolutely desperate. And what you've done then is you've sold the neighbor's home, is really what you've done. You've sold all the other homes in the market. You cannot overprice a home even by $5,000. You have to hit market value. And I always call it the riding the wave theory. If the market's on its way up, you might be able to cheat a little bit on price. But when the market's on its way down, you have to get under the competition if you want to get it sold. And if you don't get under them, eventually you're going to have to go way under them. I had a situation this week where clients were at a certain price and they're like, well, this house is $25,000 more than mine, but it has a finished basement. Well, for $25,000, I can finish the basement. I said, I know, but it's been on the market for 4 weeks and hasn't sold. That house with the finished basement is about to drop to the exact same price as yours. Guess what happens then? Yeah. You have to actually get under that. Yeah. And what
because you do not have the finished basement.
Because you don't have that.
You don't have that extra value.
And in fact, what they did is the one with the finished basement went $10,000 to $15,000 less than the one without the finished basement. So I said, guys, remember I told you your price needs to be 8.25? It now has to be 8. So that's how quick you have to get your price adjusted in order to get your home sold, because the competition is reducing prices. And if you get caught with the overpriced bag, you're in trouble and you have to get even lower. And that's why I say, get to the right price right off the bat, get yourself sold, get off the market, and then who cares what happens with the competition?
How does if you're priced too high, how does that affect the traffic coming into a listing?
Well, what happens is you don't get the traffic. You don't get any traffic. In fact, if you do get traffic, what's happening is they're looking at your house as they're looking at all the other competition, and it's going to help sell another property, not your house. So in the first 10 days, if you get a lot of showings and no offers, you have a price problem. They're using your house as they're going to look at every house in the neighborhood. If you get no showings, you have a price problem. A severe price problem. You need to adjust your price quick. And I've said it many, many times. We haven't been in a market like this in a long time. It's actually changed since I've last been on there. It's actually changed where I've never seen it this. Precision pricing is more important than anything right now.
It's so tight.
Yeah. So tight.
Oh, crazy. So, Frank, obviously a lot of renewal letters coming out these days from banks, from everybody.
Everyone. I mean, we get on top of our renewals 6 months ahead of time. We'll reach out to our clients, and not that we can hold a rate for 6 months, but many of our clients are still in those preferred interest rates of, in the ones or twos. So, our goal when we meet with them is, number one, is to understand where they're at financially. And number two, just remind them that unless they're worried about interest rates severely going up in the next 6 months, don't fall for your bank or your lender calling you and asking you to early renew because it's better for you, because it's probably not better for you. Giving up an interest rate of 2.09 for the next 6 months to go into a 4% mortgage, I don't know, mathematically doesn't make a lot of sense to me.
Well, you're paying that extra 2% over 6 months,
to a president,
right?
It might make sense. He might say it enough that people will believe him, but it doesn't make sense. It just the math doesn't make any sense.
Are the banks scaring him and saying, by the way, the rates might go up?
Well, of course, you got a couple of bank economists that are predicting that rates are going to go up, and they do that sometimes. Because I scratch my head and I say, where are they seeing that? Like, what data are they looking at? I get it. If the Iran-U.S., was to continue and go down a path that it was going, then I agree that there's a risk with oil prices being as high. But oil has rebounded all the way down to the $70 mark right now. And it was a short 6 weeks ago. It was at $110, $115. So, all the inflation increases that we saw, core inflation, by the way, came out this week. And it was at 2%, which is exactly where Bank of Canada wants
bang on
it.
what their target is,
where
right?
they want it. Overall inflation went up, but only because of one item and one item only, and that's gasoline.
Yeah.
Which is slowly coming down.
Which is going to come down. So we'll start to see that number retract. So now we're in line. Our employment reports, we'll see what happens. There's one coming out in a couple of weeks. We'll see how that looks after the robust one that we got last month. And then our GDP, we're in a technical recession. So I don't see where interest rates are going up unless something were to happen in the world that would force interest rates to go up.
Will they come down?
They could. I think there's a better chance of them coming down than going up. But at very worst, they'll probably remain flat. So if they're going to remain flat, why would you give up your 2.09% mortgage for 6 months? It doesn't make any sense whatsoever.
There's been a number of occasions over the last couple of weeks where I've had conversations with sellers who bought at the end of 2021, the start of 2022, maybe into 2023, and they're severely upside down, which is scary. And these are mortgages that are coming up for renewal. And like I had a conversation with a gentleman just recently. They bought their house in start of 2023 for $800, and I had to let them know their house was worth $750. Like it's a divorce situation, so they have to sell.
Oof. Yeah, they don't have a choice, right? But if they had a renewal coming up, and people call me all the time and say, well, Frank, like, we don't have any equity in the house. Are they going to renew us? And the answer is yes. If you bought a house with default insurance, which means you bought it with less than 20% down, the likelihood of a lender saying, no, we're not going to renew the mortgage is very slim. The only way that's going to happen is if something has happened financially where you're missing payments or there's some red flags there. Yeah. Otherwise, you're going to get a renewal letter from the lender that's going to renew your mortgage because they're not requalifying you at renewal. They're not doing any of that stuff. All they're looking at is what your payment history's been like. And if your payment history's been good, they're going to send you a renewal letter.
Knowing what's happened in the market, though, do they ever say, let's do an appraisal on this property? Not at all?
No, renewal, that's not required, and nor is it a law. Now, can OSFI put that in there? Sure they can, but that would create chaos. So I don't think that makes any sense.
Banks won't do it just on spec because of the cost.
Well, the default insurers will say, what are you doing? Like, we got your back. The people bought with less than 20% down, so you have nothing to worry about. Yeah. Let the people stay in their homes. As long as they're making their payments, leave them alone, and let's let the market catch up so that they do have equity in their home. But let's not pull a stunt on them where, sorry, your house value went down. We're seeing it in condos in Toronto, but they were bought for investment purposes, a totally different scenario. But in those scenarios, too, the renewal will come and they'll have to take it. The problem is that a lot of these investors are putting their condos on the market, so you got an abundance of condos on the market.
Just flooded with inventory.
Because they can't cash flow. Like
Right.
you can't, all of a sudden now you're getting $2,500 in rent, but your cost to carry it is $4,000. So a lot of investors are saying, we're not putting out $1,500 a month. That doesn't make any sense.
Yeah.
Just to
For
hang
who
on
knows
to
how
this.
long.
But the problem is
Who
they're not
knows?
selling. That's
Just it.
not
Right?
even
They got to bite the bullet.
Not even in Toronto, even in Ottawa. Like
Yeah,
in
they gotta
Ottawa,
bite
the
the bullet.
condos are tough sell right now.
Yeah.
Real tough sell.
So is it an opportunity for, if you're looking for a condo, is it an opportunity now to get a deal on a condo?
If you want to live in a condo, absolutely. If you want to buy it for investment purposes,
Eh.
I would think twice about that. But listen, I've always said right now, every market has a happy seller and a grumpy buyer, or a happy buyer and a grumpy seller. Every market. Rarely is everyone happy, right?
Right.
And, 2021, 2022, 2023, maybe a little bit into 2024, sellers were happy. Sellers were super happy. Buyers were grumpy. Rates were super high. Prices were super high. Right now, we're seeing rates have come down. Prices have come down. Inventory's through the roof. If you're looking to buy right now, there's probably not a better time than the last decade than it is right now to buy a property.
To get into a condo.
You have lots of opportunity. You have lots of time. I'm seeing a lot of the feedback saying, oh, beautiful house. We're just going to look at another 17 and then we'll come back to you. And they have time to do that. They have time. So
The time and the inventory.
Great market to buy in right now here in Ottawa. Great market.
But if you're selling and buying, I always say, wait a second, you need to ground yourself a little bit, because if you're not going to get top dollar on your house, you're likely going to get a deal on the one you're buying as well.
Yeah.
It's only if you're selling and not buying that you're saying, well, I wish I would have sold 4 years ago where I would have gotten top dollar. That's the only difference. But if you're selling and buying, just be grounded, because, yes, you're not going to get top dollar on yours.
But you're also not
likely,
paying. Yeah.
You're likely going to get a pretty good deal on the one you're going to buy as well.
And that's any market when you're buying and selling. Yeah.
Have a question, head over to realestateandmortgageshow.com. You can submit it there, or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody.
Did you catch my cough there? I think it's just as you went on the air, I coughed, I think.
The little red light goes on. Stop coughing when the little red light goes on.
Greg should read me better.
Yeah, you should know that you're going to cough anyway.
Yeah,
just wait.
Wait. It's been the intro coming back from each section's been the same for years. How do you not know?
because Frank was rambling as usual, and I had to listen to Frank's friggin' ramble.
It's always your fault, Frank.
Always my fault. Yeah.
All right. First segment, we were talking a little bit about condos cash flowing, and we actually had a listener question come in this week from realestatemortgageshow.com from Richard. Richard said, I'm renewing a few mortgages on some rental properties in the coming months and have just met with my bank for a preliminary meeting. I always renew with a variable 5-year and expect to do so again. I was surprised to see they wanted to raise my rate at renewal. I'm at 3.45 and they are offering 3.89 as their best and lowest. I expected to renew at my current rate that I'm paying now, since it moves with the BOC rate. I see the posted rate for new clients is a little higher than mine currently. I asked them to match my current rate, and they have gone away with my offer, and I'm waiting for the reply. Am I out of line with this request, or should I dig my heels in?
Well,
he's not going to get it.
You're out of line with the request, because just like everything else, I mean, I think fixed mortgage rate clients would say, well, if I'm renewing my mortgage at 209, why can't I get 209 again? The market dictates what's going on, and the bond market dictates what's going on with fixed rates. And the Bank of Canada and the spreads within the variable dictate what happens with that. So is the 3.89 a good rate? I'll tell you, for an investment property, it's not a horrible rate, because that would be prime minus 56. So it's not a horrible rate if it's an investment property. If it's an owner-occupied, then it's not a great rate. But on an investment property, it's not bad, because the banks tend to put a premium on investment properties.
Why is that?
Because the risk is higher.
A little risk, yeah.
The risk is a little bit higher. And listen, I mean, you can't buy an investment property with less than 20% down, and most investment properties are out there are probably at 60 or 65% mortgage versus the value. So is the risk really there? No, not really. But if the banks have an opportunity to make a little extra coin, then they find a way to do it.
What?
And that's one of the ways that they can do it. They can say there's a little extra risk, so we charge a little more for investment properties. And
what is
once
it usually?
they all do it, then they all do it. Like once one does it, they all do it. So normally a quarter point higher.
Quarter point.
Usually it's about a quarter point higher from one lender to another. Now, when you have a mortgage with the bank, typically they can kind of cheat the system and pretend like it's an owner-occupied. So sometimes you can see that the branch can give you, because they don't want to lose that deal, so they'll give you a better rate. So hopefully, in Richard's case, they have to go to head office in Toronto to get pricing. Hopefully they've come back now. Is he going to get prime -1? He's not going to get the 345, but there's a good chance he could get something in the 365, 37 range.
A few points knocked off anyway.
Which, again, isn't horrible. Now, he should wait until his maturity date. If his maturity date is November, don't give up the prime -1 now. Wait until November to do it and see if your bank will hold that rate for you until then.
What's the fixed rates right now? Because a lot of time with investment properties, if you know you're going to keep them for a while, sometimes a fixed rate's a better option to go with. Yeah. I've always gone variable, always. So I can understand where he's going with that. But a lot of times people with their investment property, they want to make sure something is absolutely fixed.
It's stable.
It's stable. They know what their payment's like. They know how much rents they're getting. They know what their cash flow is or lack of cash flow is. They know what it is, and it's stable. But, as long as you have a variable rate mortgage, that payment still doesn't change. It's just what you're putting in principal. If it goes up or down is different.
On a variable. But if you get an adjustable rate mortgage, and Scotiabank is the only bank that does adjustable if you're talking about the big five banks. The other ones are variable. So what that means is that if the interest rate goes up, prime rate goes up, your payment stays the same. You're just paying off the mortgage less. But that's not a concern for people in investment properties usually. They don't care. On your owner occupied, totally different story. But I agree with you that I think an adjustable variable makes the most sense in take away an 18-month period between March of 22 until the fall of 23 when we saw Bank of Canada have to increase rates because inflation got out of control. If you look at it over the last 50 years, the likelihood is very high that had you chosen a variable versus a fixed, you would have been ahead with the variable. And everybody's always skewed, just like I still have kids to call me. And when I say kids in their 20s and 30s that say, oh, my God, my parents told me about 18% back in the 80s. And it was just a different time altogether. The likelihood of those types of rates coming back are pretty well gone. Like,
what was it like back then? What was it like back then, Frank?
Well, back then it was you can buy a house for $65,000 a single home. So my parents bought in Carlingwood, a single home for $65,000.
At 18% interest.
At 18%.
When he said his parents, what he really means to say is, he bought it. He bought it for $65,000.
But I will say this: my wife and I bought our first townhome in Barrhaven in 1987. We moved in February of 1988, but we bought it from a builder in '87. It was $105,000 for a townhome, and the interest rate was 13.5% for 3 years. So, and back then I thought that was good because I saw my parents 5 years before at 18%. So it was good.
I remember the celebration my parents had when they renewed their mortgage from 18 to 11%. Right. They were over the moon.
My first.
See what I mean? It's all relative. I mean, it really is all relative.
No, for sure.
But even I remember when I first started playing pro hockey, and I'd come home in the summers, and I wanted somewhere to live, and I remember looking at townhomes to buy in Canada, and I think the one townhome I looked at, I think it was about $112,000, and I didn't buy it. I wish I would have.
But you thought it was nuts.
I thought it was nuts. $112,000. That's ridiculous.
All the way out in Canada.
All the way out in Canada.
So what a single home.
So
like
what
it's a townhouse.
What did I do instead? I bought a cottage on the Quebec side, and I came home. I spent my summers at the cottage on the Quebec side, and I paid about that cottage. I paid in the low hundreds for that too. For that cottage, on a beautiful lake on the Quebec side. Prices were a little bit more normal back then. My mortgage was 6.25%. That was the highest mortgage I ever had.
Yeah. So that's why today, I mean, at the 4%, it's not a horrible rate.
Yeah.
What's horrible today is the cost of everything. I mean, I say to everybody, 4% is a great rate. I mean, if we historically look over 50 years, 4% is an awesome mortgage rate. What's not awesome is the fact that 10 years ago a townhouse was $300,000, and today it's $600,000.
Yeah, it's double.
And it went up so fast. I remember for the longest times, your townhouses in suburbia were anywhere from, depending on the size of it, let's say between 3 and let's say 340. And every year it was the same. 3 to 340, 3 to 340. Right. Then eventually it was
creep to 350.
Then it was 415, and then it was 510, and then it was 600, and then during the pandemic and during the crazy, we saw some townhomes selling in the 750 to 800 range in suburbia. I would hate to have bought a townhome for 750, 800 in suburbia at that time because they're now you're now seeing townhomes in the 5s and low 6s now, which is a little bit more palatable, but it's still, I mean, when you're
coming back to pre-COVID pricing almost.
Well, I wouldn't say pre-COVID, not quite, but we're getting closer. I mean, if you could get a townhome, let's say, I remember just before the pandemic hit, I bought a townhome as an investment in Orleans for $360. And I remember thinking to myself, wow, I can't believe I just bought a townhome for $360,000. Within 2 years, that townhome was worth $600,000. Like, it was insane. insane.
Yeah, the amount of equity you had in it.
Listen,
Crazy.
they're building nice townhomes. You know, the one thing I'll give a lot of the builders is they're putting nice floor plans in place. They're making use of all the space that they have.
I've noticed the change from a photography point of view.
For sure, right?
I mean, I've been shooting these places for 20 years, and the newer, like the last 8-10 years,
feel like
the
a
new
single
design,
home.
they
You
feel like a
wouldn't know.
single, except for there's no window on the adjoining wall, and that's about it.
You know,
with
with Clement Homes now, we are actually building bigger townhomes now. We're building up to 2,300, over almost 2,400 square foot townhomes now. That's a single home, and these are going to be in the mid fives, like around 560, 565 for a 2,400 square foot townhome. Like,
it's good.
Yeah,
that's good. I will tell you, I had a client though that did send me an email this week and saying, "Listen, I'm looking at some builder homes. I feel like the builders are using this HST rebate to their advantage. I can't believe the original price of the home. It should be $30,000 or $40,000 less. I feel like they've added $30,000 or $40,000 and then said, now you can get the HST rebate.
Pull that back. And
so all of a sudden, you know, you're still getting a deal as a buyer, but instead of getting 13%, it feels like you're getting 7 or 8%.
Well, we said that too. We hope that the builders pass the savings on to the consumers. We've seen a couple builders this week, I'm not going to mention any names, that have actually taken the savings and put it in their own pocket by jacking up prices by 30, 40 grand, like you said.
Yeah.
You know, and it's unfortunate because, well, the resale market likes it because now the new homes are getting more expensive. People might go to the resale market instead.
But what the point of it was to make houses more affordable.
More affordable, and the builders are now taking that profit in their own jeans.
Have a question? Head over to realestateandmortgageshow.com and submit it there, or give us a call at 521-TALK, 521-8255. We'll be right back.